bearish kicker candlestick formation. This one is going to be a lot more reality than textbook, and I'll explain what I mean here in just a moment. But let's define what this is. And so, like a lot of these bearish candlestick formations, often we're looking for them to come up to resistance. Now, this one may not come up to resistance because a lot of times this can actually be kind of a blow off top, as you see in this instance right here. No resistance can be an all-time high. But generally speaking, what we're looking for is a candle to be, moving up, so with some bullish candles, and we're looking for a big bullish candle running on up, right, with very little wick, meaning the bulls basically open the day and close the day. So basically the bulls are in charge. Now what we need to see after that is a gap down and then a big bearish candle with, again, very little wick. And here's another key component of this formation. These wicks or body, nothing can overlap. We need to have complete separation, a complete gap between these. Now, this is really that changing of the guard. Really, it just shows the bulls were very strong, very in control, and the fact that they could, after that, the bears not only took it over, they gapped it down and closed it the next day, is a very strong psychological reversal, right? But here's the deal: I've looked at hundreds of charts and I cannot find the textbook version of it. What I find is something similar like this one, where it has a big bullish candle. You can see it's kind of running up. And then after that, it does almost gap down. It's very close here, but it has a big bearish candle, but there is overlap here. And so technically, this is not a bearish kicker. And so that's one of the aspects of this. This is more reality. And I looked through hundreds and hundreds of charts. This is more reality than it is textbook. It doesn't mean we shouldn't look for it though, because there are very similar situations out there. Now here's one where it is one, but it ran up. We have a big bullish candle. We have a total gap. It ran down, bearish candle, but the gap is so large. Like, what do we do with that, right? We kind of missed the whole move, because the idea behind it is sometimes people look to play it bearishly, placing a stop up above the bullish candle and getting in the next day after the bearish candle. But now this was closer, but again, it has that overlap there, right? Similar thing here. Big bullish run up here. Bulls ran out of steam, bears took it back. But again, we can look at this and say, the strong is stronger the more we have that like gap, or the lower the close, the less overlap we'll say, right? Makes it a better signal from a psychological standpoint. So again, looking for that run up, that blow off top, come back, drop down, and run down, and off it goes to races. Okay, so this one's so close, so close. Big bullish candle, and we have the bearish candle with the gap, just a little bit of overlap on the wick. Otherwise, that was what we were looking for. But hopefully that helps you understand what this pattern entails. Why is it's very difficult to find out there, but how we can also find very similar, almost that same structure out there in charts.